All right, you're welcome once again, ladies and gentlemen. This is a boot camp structured to focus on what we've learned so far, and more importantly, to shed more light on different entry protocols. My name remains Yemi Olale. I'm a market analyst at FX Pro, and I welcome you to class this evening. So without wasting time, we're going straight into the topic of the day, entry protocol, how you drill your entry. It's not about having a new perspective or a new style or pattern or strategy that you want to use in the market. It's about focusing more on what you've learned, what you've known, and what has been working for you. So far, so well, everything remains the same. What gave me this assurance that I'll be buying up from here? If you can tell me, this is a structure here, and I told you that the price will be going there even since Sunday, right? Or since last week, I think probably since last week or Sunday, I guess. And eventually market went there. It smashed through that level, went back inside of it, and it's been buying. But paraventure, this is why some people say they don't use stop loss. I understand them. They say they don't use this, almost 70 pips already in profit. Just that the price has done about 30 something pips or 40 pips in drawdown before now. In fact, 76 pips in drawdown before now, but it went back in profit. Like I do tell you, my focus most of the times, they are on higher time frame perspective. But though I still trade them like I want to trade them on the lower time frame perspective, because that is just me. For anybody that wants to trade and risk 100 pips, 150 pips, they can take all my setups, even all of it at a time. It is difficult for you to see 3 out of my setups, even out of 10, 14 that will hit stop loss in a week, So that tells you that if peradventure you looking to risk more, you can definitely make more in the market. But for me personally, I don't do that. I just anticipate what I can manage in the market. Anything above that, I'm out. So basically, what happened there? They swept through this low and they brought it back. I'll show you a few principles that work around these things so that even on your own, when you wake up in the morning, you can tell if the market will be buying or selling for a particular day. So the first thing is, you said we should use the AUD US dollar. So we're going back to the AUD USD. What I'm trying to say is you can get levels in the market that will be swept, and also you can still get those levels that markets will still obey. And do you remember this one right here? We forecasted this one since a long time ago. If you remember, go and check it out. Can you remember this? This was a pure demand zone here. I told you, explosive range out of it. And what do you see next? Price tapped into it. I told you to do what? To buy. They didn't buy, it bought. I'm long, 147 pips. That's not a small. That's not a small movement. That was 21st of November. It took time to get here, yeah, but it did exactly what we were expecting. So there is no way you say that this is based on random information. There's something the market is looking for. It doesn't matter if you know it and you do what is expected to be done. The market will give you money, whether it likes it or not. It's going to give you money. So the real question is, what do you see in the market and how do you interpret what you see? So quickly, I'll go to the daily time frame perspective, because once you learn how to use candles, you want to do what? Learn how to use candles. That same zone of 4 hours, I got it on the daily. This is it here on daily reference point. This level bounced off, make this entire zone very clean to me. This level being a clean zone means to me that it's a protected level, because we had a lower price level which was structured just there around here. The next candle never took out this low before they push out of that range. Ever since then, inducement and inducement, time after time. So that gives me more confidence that I can wait for them to come down here. Over time, they created lower highs and lower lows. Lower highs again and lower lows. Lower highs, I was expecting them to do what? To break below this low here. Go and check my previous analysis. I kept mentioning this every time. I was expecting them to do what? To break below here, tap into here, and bounce out. From what you've seen here, what do you see? This is a pure price action, mechanical. Price went straight into that range, it pulled out. Good students of candlestick formation patterns know that was this right here. It is a bullish momentum candle at an area of value. Having this massive bearish momentum, having this rejection, it tells you more about the zone. That it seems it's a very good one. The price forged on. It created a structure, range, but momentum moved to the upside. What exactly happened? We have more buy. You know, we don't care how long it's going to take. Our focus was just to see the new price range from this high to this low. That is the entire range we have now. All right. At a point, I would have loved the market come here into this fair value gap zone here and tapped in for a buy again, but it has been doing the buy, no problem. I want to see buy side liquidity taken here before I start selling. So one good thing about the whole thing here is to understand the timing, the structure, how they form. On daily time frame, when you have this, you have this, you have this, what does it mean to you? Market is looking bullish. So now peradventure, on the day we add this candle, we want to break it down for the following day. There's no way we can hide the rest of those candles anyways, but let me use this candle. The day we add this candle here, the day we had this candle, there's no way I can capture it alone. That's sad. The day we had this candle, as it formed like this, must have given us an information for the following day. That information could have come in any form. But let's check it out on 4 hours first. On the 4 hours, this was a Tuesday candle. So the Tuesday started from, I want to see where the Tuesday started from. Okay, I think it started from here. Okay, so this is where the Tuesday started from, and it continued to, yeah. What is it, Tuesday? How many candles do we have on Tuesday? Good. So I can take this one down like this, because this was still Tuesday. This black one was Monday. So we started from this bullish candle here. Guys, I hope you are with me. We started from here. So let me make a demarcation. This bearish candle, that was the last candle for the Monday. And this candle here was the first candle for Tuesday. So this right here is what we want to use. So between this line and this line is our area of focus for this particular day. Don't forget, it's a higher time frame perspective. Go to daily, confirm the candle. Can you see the candle? We're dealing with this candle. Now, on the 4-hour time frame, this is what we have. 1, 2, 3, 4, 5, 6. No, this is 1, 2, 3, 4, 5, 6. You know, this was Tuesday, and this also is the last candle for Tuesday. When you calculate the candles, 1, 2, 3, 4, 5, 6, that means 4-hour time frame multiplied by 6 candles will give you 24 hours, and 24 hours make a day. Are we good? So let's get to understand what happened there, because sometimes you need to understand that eventually this market that we call weekly forecasting, it's a weekly forecast based on sequence of things I've explained to you before. I told you before now that the markets might move like this on Monday. It might move like this on Tuesday. It can do this on Wednesday. It can do this on Thursday and do this on Friday. Monday, Tuesday, Wednesday, Thursday, and Friday. Why? The market will always, do you get me? Markets will always do 3 things. It's going to accumulate. Market is going to do what? It's going to accumulate, look for contracts. After accumulation, it's going to do buy or sell, whichever case. It's now going to go the opposite. So this is called what? This is called accumulation. All right. This is called accumulation. The market is accumulating contracts. All right. Now, the entire bar you see to the upside here will be called manipulation. Can you see that? Then the next flow that sold down really much will be called distribution. It can happen in the inverse way, whereby you have your all of this one, this one, this one, this one, this one range, and the next thing you have is a sell down, and people will think it's actually going to sell. Eventually, markets will buy. Accumulation, manipulation, distribution. What I want to tell you about this thing is it's quite easy, but you need to know the timing. First off, you may not find it in everyday setup, but at least you will find it on a daily setup in a week. And you will find this entire thing on a weekly setup in a month. So that is one thing that is sure. You will always find the market doing that. And when it does, it tells you just one thing: we're moving. How will you know? They're surely going to close above this level. Paraventure, I'm going to remove these ones. So paraventure, what does that mean? Below this level you're looking at, they'll close below it. Sometimes they will leave you with a trace, with a track record, or with a track rather. And if you find it, congratulations, you're going to enjoy the sale with them. If you don't, that's the end. I'm trying to break this thing down mechanically for you. Are you with me? Can someone hear me at all?
Yes, sir. We are with you,
Yes,
sir.
sir. We
Yes,
can
sir.
hear
We
you.
are listening with you.
Okay, fantastic. You guys are so interested now. Well, it's important. I told you your training will never be a 1 week or 5 day training. It's a lifetime thing. You keep learning. Like I said at the beginning, it's not about learning new stuff every day, but sometimes you need to see things differently to help you understand better what you have at hand. You may have a gun and never understand the full potential of that gun. All right. So it really matters that you know what you have, what you to know, or to know the full potential of what you carry, what you know. I saw people outside there online. Many of them don't know what you know, seriously speaking, but they have the courage because the little they know, they believe so much in it that it's working, and they have the courage to try it and they learn from it, and that is where it comes from. So I can tell you for free, there is nothing really different, but that your mindset would set you apart. So I'm just trying to bring this out to break it down mechanically so you can see candle in, candle out, how they perform and what they mean. We started from the daily time frame perspective of a candle, and with that, we want to determine what to do with the next day candle. I will go to the 4 hour time frame to further see, because they sometimes these things are called daily buyers in the markets. Meaning what I want to trade today, I don't know until today has begun. Just like the way we do market forecast. What market we do for the week, we don't know, but this is the market for this is the forecast for the week. So what I'm saying is this is accumulation, manipulation, distribution, otherwise known as AMD, and it's also the principle of everything you see around CRSD, changing the state of direction of the market. The same thing you see in CRT itself, which is the candle ring theory. There's so much thing going on there. I don't want it to get lost in the noise, so I have to bring this back to you once in a while to always remind you that you're on top of your game. If you don't, if we don't, or if I personally don't use BB terminologies for you, it doesn't mean you don't know much. You know so much already. The terminologies, you can always create for it. You can always make anyone up with your own preference. You can call anything anyhow. You can call it a name. Sometimes when we class, I tell you that candlesticks that are doing this nonsense movement, I said it's not important, but they are necessary, right? I said they are enemies of progress. I just call them that name because they're really not adding any value. But that value they are not adding, it's a communication which I enjoy. It means the momentum has almost gone zero. So what am I looking for? An opportunity after such silence. Market is silent for a reason. Market is silent for a reason. Do this and do this. So we can't say this is useless. By the way, I just call them enemy of progress. And somehow I see some people naming them enemy of progress regardless. I say those are not the names of the candles. It's just how I just put them to just make you understand. So what I'm trying to say is forget terminology sometimes, focus on principles. With principle, you can see multiple ideas that they are the same. That's why I tell you that if you go outside there head to head to analyze market, to break down your charts, you will realize that you know better than some of these people that you see online. I'm telling you, you realize that you know better than them. So let's get to work. I'll take this out as well. I'm going to take this out. This is our case study. From this price to this price, 4-hour time frame. It means 6 days. It means 6 candles. That means 1 day. All right. Now, where was the low of the previous day in the markets? Let's go to daily time frame because we're talking about daily bias, right? So where was the daily low of that particular day? This was the low of this particular day right here. I'm just trying to mark it. This was the low of this particular day here. All right. And let's go back to the history, everything that happened around there. The price went here. This guy went to the demand zone on the daily. Can you see it? After coming there, what did he do? He bought. Now buying with long rejection candle to the low side. Long rejection candle to the low side. These two candles, what do they mean? I need an answer now. I need someone to answer me now. Somebody. What does that mean to you when you see this kind of rejection to the low side and momentum above? Rejection to the downside and momentum above. After hitting a significant level like this, what do you think in the market? I want to ask you, what are you doing? What is the market showing you?
They are rejecting lower prices.
They're getting what?
They are rejecting lower prices.
Thank you.
Preparing
That's
to
the
go
word.
long.
Thank you. In other words, they are ready to buy. These guys are ready to buy. That information is simple. So which means if you are seeing this day, you saw this day, even on this day, you'll be thinking they will buy. But that's one thing in the market. You never can tell when, but you can tell where. On this particular day, they went about 34 pips or 30 pips against your wish and desire. But eventually, what did they do? They bought. This is where weekly market outlook is very helpful because this is an entire weekly outlook, not 1 hour, not 4 hours. Like this is what market should do in a week. But what we do on the group is we try to trade it as if we want to leave the trade that same day, because that is the reflection of my own kind of trader. More of a day trader with an insight of a weekly forecast. It helps me. So that's why sometimes I could tell you, guys, hold on. This market has not gotten to where we're going, but let it go there first. Because everything you see the market bought from Monday to Thursday, you can see it sell all back on Friday. And I've seen that multiple times. I've lost count. So why are we doing this? Basically, to remind you that everything you see in the market is real powerful, really, really powerful. Your interpretation will determine how much you're going to make. Your what? Your determination in the market, your skill set, your clarity, your experience, everything will come together at some point to determine how much you will make. I'm telling you, when you look at some of those people that are making profits in the market, just try, go online and check. Some of them don't even have a setup to show you. I know everybody here, I think, how many of you now? About 9 of you thereabouts. From let me recall. You don't need to answer me. I just want to make a call. From Abeni to Augustine to Danny Welbeck to Edwin to Ifeanyi Sam to Ikechukwu to Moscow to Victoria. At least I know more than 70% of these people that they normally come to class so well, like back to back. They don't miss class. At least out of these 9-10 people, at least I can talk about 6 or 7 of them. So what I'm trying to say in essence is, at your level with what you know, I want to give you an assignment. Go online. All right. When you get there, check any of those guys that make noise, that they make profits, whether it's a big guy or not, but so long they talk about Forex. Now check what they trade. If they have a setup, 90% of them don't have a setup. They have no setup. They just want to show you profit. So which means that can be demo. So how will you know? But check out for those that have a setup and check what they do. Check their setup. Whatever currency pair it is, go back to your own computer and check what you would have done. If now you, how you for analyze this trade and come back and check their outlook, check what they make out of that trade, you would realize that you know so well in the market. Do you know why I'm saying that to you? You may not appreciate how much you know, and you're thinking that we need to do more new topic every day. I'm not that kind of person. I'm not even interested in it. You can't have that from me. Not because I can teach you new fresh topic every single day of the year. For those that know me so well, from the beginning of this year, even before this year, I've been creating content every single day. I mean content, forex education content on all over my social media, and I post them daily. Every single day. I've not missed one. Every single day. So I can tell you more
What's
about
your name on social media? I've been looking for you to follow you, but I can't find you.
Okay. I'm on LinkedIn. Yemi Olale is my name on LinkedIn. Yemi Olale, just YEMMIE. Olale it is on LinkedIn. But on other ones, OPYDOC. OPYDOC on TikTok or Instagram or Facebook, anywhere else. But definitely on YouTube, you can see it. So what I'm saying in essence is very simple, right? What I'm saying is very simple. To do new topic every day is not a problem. We can do new topic every day. I can tell you for free, we can run new topic every day. It's nothing to me. Seriously, it's nothing to me. We have 365 days. How many topics do we have in the forex markets? We'll break it down. We've been here before for almost 1.5 hours. We're breaking down just the XY. That's to tell you that we can do many things, because everything you know in the market, they come to play at some point. But not everything you know will play at the same time in the market. That is the little difference. Everything you know will come to play at some point, but not everything you know will play out the same time in the market. That's just the reality. Now, the point is, when you get those guys online, check their form of analysis, check what they do, check what they are looking for. If possible, listen to them. There's nothing wrong in that. Listen to them. Then go back to your own, try to do your own analysis and compare. Let the market play out. Go and check their results. If they post it, if they lose, they won't post it. Then compare to your own results. I'm so confident in you guys that you know a lot already. At least now, if I tell you what are you doing on this trade, worst thing is I'm not on this trade because this has not happened, this has not happened. But when this happened, I'm taking a buy or I'm taking a sell. That is a trader. So a trader is not someone willing to take trade, and once I get to the chart, I'm buying, I'm selling. How? Now you understand better when I told you that the market is about clarity. Sometimes you will be idle. Like Monday, Tuesday, Wednesday, Thursday, you will be so jobless on the chart because it will be like nothing is happening. But trust me, hold yourself tight. Even if you don't see a setup for that week, following week is coming. Sometimes it is just that powerful. Sometimes. So we need to put all of these things in perspective. Now back to the main dish of the day. On the daily time frame perspective, we've seen clearly that the price has rejected this zone twice. It has rejected this one from an area of value. These two guys here already told you what, that we are going bullish. Now, if we are going bullish, it's about few things here. I'm looking at this. So it can happen. So some other time, we can see the market from different angle. One, this entire long momentum, what would we have done? That's the bigger question. So if you are on charts, would you have seen this happening ahead of time? Maybe yes, maybe no. Let's go to the chart. Now going to the 4-hour time frame. We're coming back to the daily time frame and going back to the 4-hour time frame because I want to make it clear to you. Don't forget, I've marked those levels already. This to this level That is for that 1 day candle. But before we have the fantastic movement, how do we know that that day was going to be fantastic? Now, this is a Tuesday, right? Now, let's check the low of the Wednesday. Oh, sorry, the low of Monday. All these levels were Monday candles up to here. So we have Monday candles here. So this is the lowest price for Monday candle. Now, let's check it out. Lowest price level for Monday. You need to understand what you're doing. This is the lowest price for Monday candle. Can you see 24th of Monday, 24th of November, Monday, right? This is the lowest price for what? For Monday. After this level, it was Sunday market opening and the rest. So it's the same thing for the week anyways. This is the lowest price for Monday. And of course, this happened to be the highest price for that Monday too. This is the highest price for Monday. Now, let's put Monday in a cage. Okay? I'm just trying to put out something here. Let's put Monday in a cage. This is where Sunday started from. The new market opened from here. So we have no problem. I try not to overload this entire chart. So Sunday started from here. This is a new week. Now, Monday happened to create this low and it created this high. And just around here, this was the last candle for Monday. So which means this was the high price for Monday and this was the low price for Monday. That is good. No problem. Tuesday opened. The first 4 hours closed just a little below the bearish candle for Monday. No issue with that. Do you know that when I told you to go to a daily time frame and look for a close above or close below, do you know that thing is powerful? Because you can do the same on a lower time frame. Now, this is a daily zone, right? The lower for Monday and the higher price level for Monday. This candle, what did it do? It went close. Let me zoom it for you so you see the clarity. It went close to where? Good thing you chose this, right? Somebody chose this currency pair. So don't worry if you're trying to wonder if I choose this. I didn't. Now the price went here. When the price got there, it didn't break above it. It came down here, it didn't close below it. Well, what do we have? It went straight to the level it opened from. It closed the same way, meaning there's no reaction. Everything here is just a dance. But in between that dance, you can see clearly lower wick, upper momentum. Now this same candle, look at this one right here. It opened from here. The moment it opened, it swept down. Sweep it down here. What's this? The low of Monday candle. The low of Monday. It swept through the low of Monday. Why? In case if you are buying, this is high time for us to sell against you. It's high time for us to go against you. It's high time to hit your stop loss. If your stop loss is hit, now we can move. They started moving, they started moving from here, 20 something pips. From there, they started buying upon their entry zone. This is where they enter from. They started buying. Now, it's important. Let me say this. It is really, really important to see how the price closed. Sometimes you'll be wondering that does it really watch it? It's watch it a lot. Because you can't really tell how far the market can move. So it's worth you waiting to see the end of a candlestick formation. We call it candle closure. See how the candle will close before you decide, before you conclude. So this was the low of the what? This was the low of the Monday candle. 1, 2, 3, 4, 5, 6, right? This was the low of the Monday candle. Now, I'm taking this out. This was looking differently on daily, but this is a low time frame. This is the week rather. This is the week of the low for Monday movement. So that being clear, we have this momentum of Tuesday candle closing above this high. Don't forget, one thing about the market is they will eat you on one direction and show you where they're going on the other direction. Don't forget what I said. I said the first thing they do is to manipulate. Are you with me? Or you're tired? Are you with me?
Yes,
I'm with you, sir.
All right, great. The first thing they do is to what? Is to manipulate. sorry, to range rather. It's called accumulation. The first thing they do is to accumulate. After then, they manipulate. They do fake outs. They dribble you. Say, I think it was going to buy. Why did they now sell? It is the dribbling. It's called manipulation. They dribbled you here. From there, they started buying. Everything I've explained within this concept is what you've seen here. It doesn't come out every day or in every time or in every whatever, but it comes out surely. At least if you focus on that alone, you can count number of times you will make it in a week. So look at this from here to here. The market went down and it's closing above. What does that mean? We want to destroy people that are buying by selling against them. After they've been destroyed, then people that are looking for fresh buy, they will now see this and say, can't you see that the market is opening above the previous day high? But where were they when the market was doing this? So I'm training you to become a better trader, that you don't just jump on the conversation about the market structure. You understand entirely what is happening within a structure. All of this is a contest. Even if I'm not there, if they ask you, you should know that the first thing I'll tell you is most likely the price is coming right here. This was the previous side. This is a contest right there. This is a contest. This is a price contest. All of this happening here is just to get here first. When they get here, you see reaction. This is reaction, of course. Look at this. Look at that. If you know nothing at all, where you see significant movement, just let me bring the chart back to where you can understand what's going on. Look at this. I've told you before multiple times, the price is about a cycle. A cycle will not begin until one is completed. Inside that cycle is where you see the come on, we've done all of these things anyways, but I'm just trying to. Inside all of these cycles where you now see something like the price is doing internal range liquidity, external range liquidity, and blah blah blah, yada yada yada. All of those things, forget it. The thing is happening everywhere. Trust me, it's happening everywhere. You've had a range already. Everything happening here is internal range liquidity, whatsoever structure, and price is coming back to a demand zone because it's here. I know price is still coming back here somehow. When it breaks this level, now we start looking for a sell below this entire range. They move above this, below this level, moving right here. They're coming down, coming downward like this. It's simple. The same thing could have been for the upper momentum. Just close it above around those levels, and they just move above this level. They create something like this, and after that, they continue buying. That's simple. Nothing. The only question is, in between those ranges and the rest of that mini opportunities, will you catch it or not? Leave that aside. Back to business. Trying to dissect this whole thing. I want to spend just 1 hour with you. Now, the price has already gotten above here. For everyone that understands what we're doing, you should know that this is pointing you to what? To a buy momentum, because it has closed above the previous day high. Is it possible for the price to come back in here? Yes, it's possible, but not every time. Most of the time, that doesn't happen. So what do we have? We're looking for a buy. Where is the nearest eye? This is the nearest eye structure. I said it is what? A daily bias thing. Daily bias. You can't find this every day, but the days you find it, you should do well to identify it. So what do you see? You saw the price. Actually, it went this way, went this way, went this way, got this high. And at the end of the day, if you were looking for an entry, where would it have been? Where would it have been? At the closure of this candle, the next candlestick that will form, you will take your entry. So that will be here. What about your stop loss? Well, that may look big, and at the end, this is AUD US dollar, so the volatility is not much. So from here to the end of this level, how many pips is that? 33 pips, too much for me. So which means if I want to do this, I can go to a lower time frame to find my what? To find my structure. Because right here, what I'm seeing is too much. So what can I do? I never need this candle will create this low here, because I'm entering from the next candlestick opening, which is here. So if I open from here, I never knew the market would do this. But where can I put my stop loss, potential stop loss? Let's go to 1 hour. Let me mark this candle so we don't miss it out. Let me mark this candle. What are we doing? We're trying to look for a stop loss level. Okay, this is what? When was this? November 25. November 25. Let's go to 1 hour, please. On the 1 hour time frame, November 25, November 25, November 25. This is it here. Yes, exactly. So I'm taking this out. Now, After we had that candle, you remember the candle that broke the previous high? It was here. Can you see it? It was here. Now with this structure that you're looking at, with this structure, it means you're buying from here. So from here is a buy. But peradventure the market starts selling. Where would you have put your stop loss? Anyways, with this massive momentum here, it's ideal to put it somewhere around here. It is much. This is unusual, but it can happen. This is about 30 pips stop loss, which is really, really much. All right. It is what? It is really, really much. But regardless, the way it is, since we have a long bullish momentum here, right? This level 2, you see, we have equal high zone here. Equal high zone here. You can still use that zone for a stop loss. Peradventure, that's what I would have done. Why? Apart from the fact that I know something about fair value gap zone, but this guy, I've not completed this formation when I'm taking a buy, because I was taking a buy based on what I saw on 4 hours. But I want to have a stop loss level no matter what. Let me have a stop loss level. So this level is good, but this will be preferred. Do you get me? This is a low price level that was secured before we have that bullish momentum. So this level, this low here, is what I'll be using for a stop loss. So if I enter from here, let me now check. Am I okay with this level? 27 pips, 30 pips. Come on, this is much for me. What will I do? I will go to a lower time frame again. 27th of what? 20. When is that date? I'm going to find it. Don't worry. Look at it. Okay, this was the candle. So if you check, you see that all of these zones, they happen to be an explosive movement out of this range. And don't forget that you are buying from here. Do you remember? If you see this on 15 minutes time frame, what I'm trying to do is I'm breaking down the time frame for you, because you know that the candlestick on 4 hours that broke this level was 4-hour time frame, right? Now that candles, after it has formed and closed above it, that means this was the candle that closed above it. Check the time, we'll confirm later. Okay, now if this candle was the one that broke above it, or it could be this one, it should be on a particular, it should be a round up number. So this is 1 p.m, but it should be 12 p.m. I guess. It should be 12 p.m. It should be 12 p.m. or 2 p.m. 2 p.m. Nigerian time. I'm using a New York time. But anyways, leave that aside. What I'm trying to say is on 4-hour time frame, you saw that the candle broke above here. So the first candle that broke above here was here. So let's even say eventually we have some other timing that still broke below it but close above it. It's still a bullish momentum, right? So let's say it's around here. No matter what, this is around where you're entering on 4 hours. So where do you want to use for your stop loss? Trust me, all of this level looks much, because this is the only zone that looks like where you can use for a stop loss. So this is about 24 pips here. Can you see from here to here that you may be entering from 24 to 27 pips, which is the same thing from where we're coming from. So the question will now be, should you be entering from here? That's if you're entering on 15 minutes time frame. If you're entering on 15 minutes time frame, your powerful fair value gap zone that you had before that level was broken, you can employ that into the business. The powerful fair value gap zone before the level was broken. Can you see the previous high? The previous high structure here. Before it was broken, you can use that zone. Why? You wouldn't be entering from here if you were on 15 minutes time frame. Yes, 15 minutes time frame. You'll be waiting for price to come to where? Come to a level like this, fair value gap zone. Coming to fair value gap zone the first time, it pulled, it gave you 8 pips, came back in and out, it gave you -1 pip drawdown, it went again, and from here it gave you powerful momentum, and from here it gave you how many pips in total? It gave you 46 pips for that day. This is the daily bias, guys. What I'm trying to say is eventually this came down to your fair value gap zone. All of this is just a pure analysis. Trust me, I didn't rehearse this ahead of time. See, when I entered this session, I never knew this is what I want to teach you exactly for today, because I just want to focus on what you've known before. Seriously speaking, I just want to focus on what you've known before, and let's talk about it. Let's do it. Let's break it down even further. So don't think, maybe probably I've seen this happening anywhere. Most preferred entry zone in my box is always the middle point. This is it you see playing out. One of you suggested we use AUD/USD. It's not even my kind of currency pair. I've told you multiple times because of the range. So I'm telling you that these things are based and built on principles, guys. If you were on 50 minutes time frame, trust me, this is what you could have done, because right here you've seen the candlestick breaking out on the 4 hours. So let's go to the 4 hours again. Let's go to the 4 hours. This is analysis, guys. This is how you analyze your market. Forget all those plenty noise they're making there. You basically don't need it. Trust me, you don't. You really don't need it. November 20, whatever. Where are we? Where are we? Where are we? Okay, good. This is where we are. Can you see the 4 hour candle? It closed 21 o'clock, right? This closed 21 o'clock. Am I correct? 21 o'clock. This is 1 o'clock. Okay, this was 21 o'clock. It closed 21 o'clock here. Can you see? Now, after this has closed, if you don't know where to enter from 4 hour time frame, basically you'll be entering from the next candle opening, because this has closed above it. But if you want to see further reaction, that is when we now went to where we went to 1 hour time frame. You see, cross-sectional time frame analysis is beneficial to you as a trader, and I do it a lot of times. This is on 1 hour time frame. Don't forget. Can you see this? This is on 1 hour time frame. This is the low, or this is the high of the previous day. This was the candle of Tuesday. Can you see Tuesday that broke it? So what are you looking for? We're looking for a buy momentum. At the breaking, you can be looking for your buy momentum from here. Just that this took you for a sell of 6 pips before you started buying about 45 pips in your favor. But what we're saying is, where would you have put your stop loss? If you bought from here, would you have put your stop loss here? This is 26 pips. Can you afford it? If you can't afford it, then you have to go to that lower time frame and start doing all of those things. But you can see on lower time frame, it was more sensible, because you are not entering from here. On lower time frame, you are entering from a middle point like this. So if you're entering from a middle point, if that would be your case study, that means what you will be risking from here is about 20 pips, which makes it a good one. At least. If you want to enter from the 1 hour time frame perspective, that means you'll be talking about a fair value gap like this. But I won't use this as a fair value gap. Look at this. 1, 2, 3. This candle supposed to break above this guy here. It's not breaking above it. There should be a wick above this wick. So to me, it's like this entire movement is not there. Come on. There's nobody, there's no momentum. So I'm not using this guy on 1 hour. I will never use this as what? As a fair value gap. So you can't find me saying, this is a fair value gap zone here, blah, blah, blah. Never. So what happened is that instead, go to 50 minutes time frame, 4 hour to 1 hour to what? To 50 minutes. On the 50 minutes time frame, what do we have here? Go back here and check it out. November, where is it? Guys, what? Okay. Honestly, they don't get also. Okay, here we are. On 50 minutes time frame, it looks pretty good, because the 4 hour candle that closed was around here at 21 o'clock, right? How is this guy showing something different? Where's 21 o'clock here? 21 o'clock is around here. That will be around here. If we're looking for that timing, this thing happens every time anyways. That's one of the bad things about time frame jumping in and out. Can you see? This is way not in range. This is no. This data will confuse you. This data will confuse you. That's what I used to tell you. On the time frame that you see it, just eat it. If you see it on this time frame, know exactly what you're looking for there, and carefully go to a lower time frame if you want to. But most of the times, you have to deal with it on the time frame you're looking at. On the 4 hour time frame, we've marked everything possible. This was the previous day high, and this was the previous day low. All right. If you go to daily time frame now, it can look scattering, because it may look like it's not the same thing you're saying, but trust me, it's the same. The time frame you're analyzing, the time is a lot about your entry. Now, that being said, right here we have the price creating that momentum to the level here. It's falling back into the range. You never knew it was going to fall back. The only thing you're trying to do is to ensure you're buying from a discount level. And even if you draw a range from here to here, this middle point is not really a discount level. Should we try it? Go to your Fibonacci tool, rise it from here, where we have, it's even more than this anyways. I'm just trying to help you. It should be from here actually. So look at where you're buying from. This is still a premium zone. And you see that? This is still what? A premium zone. The market didn't come to the discount level. Just to tell you that in case you're using Fibonacci, there's nothing to tell you to buy around here. But the fact that it has broken the previous structure, which was the high here, the last fair value gap zone there, mark it out like this. Don't forget, after this one has closed, that is when you want to enter the market. But you want to see the price falling back into a range, into a reference point that you know for a buy. Because if you want to ask yourself, why am I buying here? Because the market broke above here. One, that's not the only reason. Somehow you may make it, sometimes you may not make it. On 4 hour time frame, it looks the same, right? But look at this. Just draw. Eventually, the market pull back into this fair value gap zone. And at the end of the day, it makes so much sense. This is it here. I wish I have more time to show you another one. But if we don't do that today, we can do it tomorrow regardless. I care less about that. I just want to understand what I'm trying to say. This entire range here that you see, this entire thing is a swing from here to here, creating a low. Everything from here is internal range liquidity. You must have seen that multiple times. I told you about this kind of candle, this kind of setup. When you have failed to return candles, market has been buying, all of a sudden it showed a bearish momentum, which never had an impact. The market continued buying extensively. I say do what? Mark the guy. This is an example. This is an example of such bearish candle. Markets in the future, look at the price coming back into it, push it out. In the future again, market extend it. Come on, guys. Look at the price, pushing it out. Liquidity void, selling with huge momentum into this range. What does that tell you? One, even if there's nothing, all this one that you don't sell, you will buy it back. That's the rule one, most of the times. Two, at an area of value you sell into, what are you going to do? Of course, looking for a buy. The buy momentum that will take out this entire range from where you started selling from to where you sell into. We're taking a buy from here. After this bullish momentum, we're taking a buy, guys. And the buy, extend it. This is your store. This is your take profit level. Eventually, the price got there. How many people was that? This is about 20 pips. These are small thing you can. This is small because this is AUD US dollar. On higher time frame or on other currency pair, from that place to this place could have been like 60 pips or 40 pips or 80 pips. What I'm trying to tell you is everything you've learned play out in the market. Just that sometimes they would have played out before you see them. I'm teaching you a practical way of how to anticipate ahead of time. So I think that makes sense. Do you understand? How you are lost completely?
Oh, we understand, sir.
You understand it, right?
Yes,
Okay,
Yes, sir.
so basically that is how you do your daily bias analysis. Sometimes, as I said, you may not find this happening every single day. Okay, but the day you find it, know that this is what you will be doing. Just know that this is what you'll be doing. Some other times you will find them in between trading session of a day. Exactly. In between trading session of a day. I still tell you, know what you are doing. This thing is not hard. You just need to understand. Seriously, it's not hard, but you need to understand. So if you go back to daily time frame, this is what you're looking at. But on daily time frame, you already have an insight that price likely get here. Look at today's candle. Look at today's candle. Like I told you on Sunday on the weekly time frame, I said I don't have any issue with this guy. I just wanted to get here, and that was the end of the story. I don't even have to talk about it for long. Seriously speaking, I don't have to. This guy has done his own bit in selling. Look at where he started from. Lower lows and lower highs, lower lows and lower highs. Equal high level here. I'm less concerned. But look at this structure here. This was powerful. This right here was powerful. It broke through it right there. That was yesterday candle. Close above it. Today, maximizing the opportunity. This entire week, it's going above it again. To me, nothing really much here. Just to visit this level. Breaks above it, visiting this level. But before then, we have an insight. It's not just about if this happened, and now we'll be looking for. There's this clear structure we're looking for. And you've seen that. Some of you can bear the witness. You've seen market doing over 400 piece, 500 piece for us sometimes before. It's still the same thing. Everything you've known is powerful. Create time to break it down. Create time. Look at what we are doing. Just AUD US dollar. This is 1 hour. We spend nothing less than 50 minutes on this. So when I'm analyzing this on a weekly basis, and I'm talking about a currency pair in 3 minutes, what do you think? I'm just giving you the insight that this is what is happening there. The real breakdown, it's more than that. It's really more than that. Because we have to break it down, we have to talk about everything that is happening that we can see. So the weekly forecast is just more or less like a summarized insights, believing that you know more, then giving you the summary that this is what exactly I am looking for. Even I'm buying at this level, it's still because I believe that you know something about why I should be buying from here. Detailing takes more than that. All right, guys, it's 5 p.m. already. Thank you very much for joining. Do you have any question? Do you have any question?
Mine is just a comment.
Good afternoon, sir.
All right. Okay. Good afternoon. Please go ahead with the comments. Please go ahead with the comments.
Okay. Thank you very much, sir, for this topic, the accumulation, manipulation, and distribution. I observed that this is what blew my account, especially after my analysis by using the pair gold.
Okay.
And at last, I will see that the price will go in the same direction I've already analyzed. But
yeah.
the stop loss is tight, very tight, because of the size of my account. So I thank you so much. I have no insight now on this.
Oh, great. Fantastic. Fantastic. I wish you all the best. Try it out. If you have questions, please always reach out. All right. That's great. All right, madam, you can go ahead. Hello? Question? Can someone hear me?
Well done, sir. Thank you so much, sir. Yes,
All
we
right,
can
you're
hear you.
welcome.
I can hear you, sir.
All right.
Sir, I don't know if this is a question or a comment or whatever, because as we are teaching, I'm just trying here, honestly. All you have been teaching us, I make money on chat. Let me say it that way. Because once I put my setup on chat, I usually go through. It will pick the entry. Exactly. I use fair value gap and it will pick the entry. Before I could notice, it will just jump up and go the same way that I've projected. Now, if I now want to trade it on my own live account, it will go the other way around. I don't know what I'm doing wrong. Take, for example, the Euro USD.
Okay.
This afternoon, I could see, if you look at the chart now, it's still on. I could see the sweep there.
Okay.
Though there was, I marked my fair value gap underneath the trend line and the resistance. There's a resistance there, there's a fair value gap underneath, and there's a trend line. It has broken up the trend line, come down, make a sweep on 4 hours. All for me, but it has not touched the fair value gap. All for me to just think that it's not coming down to the fair value gap again. Since that bullish candle has made a sweep, I just entered. The next thing I see is the next 4 hours candle coming down into the wipe off my Excel, enter the fair value gap, and move on. And even to assume I'm using the fair value gap, I'm going to start from the middle. Now it's not getting into the middle before, though the candle has not closed. But how can you just put me through on that?
Okay. The network has been bad. I couldn't really get too much, but if it works for you while you're on demo and it's not working while on live, if it's the same thing, that would be a psychology thing. Seriously, probably on demo too, at first it go against you before going in your favor. And on live now, probably when it was going against you, it hits your stop loss before it starts going in your favor. So that is a psychological thing, and we'll work more on the risk management and know what you're risking per trade and what you're trading particularly. So that will be that on that. And for Euro US dollar, like you see, I don't do more than 20, 25 pips stop loss, and I look at where I'm entering from. I refine such entry. So that's what I do basically. So I think we can do more on that. Look at those levels more critically. At the beginning of the week, I anticipated the price to jump into this level before we had a buy. It was very close to the beginning of that zone, which by spread, it could have actually picked anybody if you use here, but I just prefer it move more into this level before we have a buy. My projection was to see it buy above this high and close below it. It went, bought above this high, currently closing below it. And you can see that this is just the projection. But then when it comes to the entry, it has to be refined based on account size, and the lot size will also determine how we're going to enter that. So I think we'll work more on the risk management based on what you've said so far. Okay. All right. Is it network? Okay, can someone hear me?
Yeah, yes, sir. Thank you very much, sir.
All right. Okay, fantastic. That's great. So thank you very much for joining. It's a beautiful time spent with you. Tomorrow we're coming with new ideas. We're looking at something like this again, and then let's see how we can make it better. Year is coming to an end. Everything you've learned this year, I believe you've really improved over the time, and next year will be a massive one. So let's keep doing what we can do before the year runs out. I wish you all the best. Enjoy the rest of the evening, and catch you again tomorrow. God bless you. Bye.
God bless you, sir. Thank you.
Right, sir. Thank you, sir.
Bye.